Hi everyone, welcome to the final module of Business Math, Module 6. I have to tell you, this one is in my mind the most difficult module, but don't panic, we can get through it together. There is only one chapter in this module because I do believe that the concepts presented here are a little more complicated. It can get a lot more confusing. In this section, we're going to focus on depreciation and cost recovery, which are some essential concepts in business accounting and financial decision making. And we're going to first look at understanding what depreciation is. That is the process of allocating the cost of a long-term asset over its useful life. Businesses use depreciation to reflect how the assets that they own lose value over time, and to match expenses with the revenue that those assets help to generate. Because it's like a car. When you buy your car, the minute you drive it off the lot, right, it's worth less than it was. So these businesses that have to carry these assets on their financial statements, they need those to depreciate. They need them to be shown as worth less over time, because they will be. They're eventually going to need to be replaced, right? And they don't want to pay the same level of taxes or show them at the same rate as they did when they were new. You're going to learn about several common depreciation methods. This is what makes this confusing, is that there are multiple ways to do it, depending on the particular business and what they're trying to accomplish with their depreciation. And we do not have time to get into the weeds about all of it. That would be in a much more higher advanced class on this. We're just going to look at the basics of them. We're going to start with the straight line method, which spreads the cost evenly over the life of the asset. That is probably the easiest one to do. We're going to look at the sum of the year's digits method. That's an accelerated approach that records higher depreciation, like it depreciates quickly at the beginning and then slower as the asset ages. We're going to look at the declining balance method, which is another accelerated method that applies a constant rate to a decreasing book value each year. And then the last will be the units of production method, which bases depreciation on actual usage rather than time. And you see that a lot in equipment. Like if someone buys a forklift that is expected to run a certain amount of hours, it will be depreciated based on the number of hours it's been used. That's what you usually see that for, is equipment or heavy machinery. You see a lot of construction businesses using the units of production method of depreciation. Now, I want to tell you, as you enter into your assessment, this is the one where you need to have good notes. And it's okay if I see more than formulas on your page, because if I were you, before I went into this assessment, if I was going to take this assessment and I'm teaching it, I would make sure I wrote down notes. These are the steps of this type of depreciation. These are the steps of this type of depreciation. Because if you don't do it for a living or aren't really in-depthly studying it, it gets very confusing about which is which. Okay, so be sure that you practice the concepts and have really good notes when you enter into this assessment. And the second chapter of this module, we're going to look at asset cost recovery systems. And those are prescribed by the IRS. They're methods used for income tax reporting. And they include MACRS, the current system, and before that it was ACRS. And you'll learn how these systems determine depreciation for tax purposes, right? Which is a lot of the reason that businesses want to show depreciation, is so that they can show it on their taxes and it not look like they own quite as much as they did perhaps the year previously. Finally, we're going to cover depletion, which is similar to depreciation, but depletion applies in natural resource industries like the oil industry, gas, minerals, because when you pull those things out of the ground, they are depleted, right? And so your mine is going to be worth a little less as we're pulling things out of the ground. And you're going to learn how to calculate the periodic depletion of these resources as they're used. Okay, guys, this module works just like everything else. There's practice quiz. You can take it as many times as you need to. The assessment is at the end of the module. Again, please take my advice on this particular assessment and make sure that you're prepared to go into it with a good set of notes that gives you, because the steps are not hard to complete. They're just hard to remember, if you understand what I'm saying. If you're looking at 4 different types of basically the same thing, but the steps are very important, you don't want to confuse yourself on what the steps are. So be sure that you have great notes for this assessment. Okay, and when you're done with that, when you finish this assessment, you are done with business math. And I'm really excited for you. You'll be able to have that credit, can never be taken from you. I have enjoyed working with you, and I wish you all the best in your future endeavors.